Hey guys, good morning, everybody. Uh, it is 6:28 right now. We got market opening up shortly in about 2 minutes. So before we get started, just a reminder, guys. Sorry, let me just people are still joining in. So before we get started, guys, just a reminder, futures trading involves substantial risk of loss and isn't suitable for all investors. You can lose more than your capital investment, and nothing you should see here should be taken as financial advice or solicitation to participate in any trading program. I myself and Cody Kai Capital LLC is registered with the CFTC as a commodity trading advisor and is a member of the National Futures Association. I may hold positions in the market as discussed, and my views can change at any time based on market conditions. Everything I'm doing today is for educational and informational purposes only. I'm just walking through my own analysis and my own trades. Past performance does not guarantee future results, and if I reference any backtests or hypothetical performance, understand that those results have limitations and don't reflect actual trading. So, all right, guys, let's get started. Yeah, I got to do that disclaimer pretty much before every session to be able to continue to do these live sessions. So just get used to it. I have to do this disclaimer before we do anything. And this is also here on the screen if you guys want to review it. But yeah, because I'm registered as a professional trader and I'm registered with the CFTC NFA, I have to make this risk disclosure for you guys. All right, all done. We got market opening up shortly. If you guys are looking to take the entry right here for the breakout is against momentum. And there you go. It's coming down right there for a sell. And it looks like it already hit. So if you guys took that trade right there, that thing dropped down pretty fast. 40 points hit already for the breakout. You guys already anticipated that to happen. I mean, obviously, because it's been against momentum. But yeah, looking at that right there, there goes the first directional move for the breakout for 40 points. If you guys caught that, nice work. If you guys did it, completely fine. I don't like taking the breakout because of this manipulation. The manipulation could be good and it could be bad, right? It's good when it works and it's bad when it doesn't because you're gonna get slippage almost every time when you are um, looking for the entry. I mean, there's always going to be slippage here, guys. You're going to see this big spike every time. That's why it's either going to hit your TP or your stop loss right away. Looks like a couple of you guys here did catch it. So it looks good. Hey, Ben, morning. Morning, Daniel. Morning, Lila. Morning, Steven. Yeah, next to the market's looking slow. I know the ATR is really, really low right now, right? 12 ATR. Um, Looks like Steven missed it. Mendez is asking just to understand it was against and buy. No, if it was against us for a sell, Mendez. So I think you answered your own question, right? Because the profit is down here, not up there. So this was a sell, not a buy. Because it was against momentum, right? If it's against momentum, then if there was a buy signal here, you're taking the sell. If there was a sell signal here, then you would take the buy. But you basically answered your own question. Uh, does that make sense, Mendez? For the entry? Because it's not with momentum, it's against. Let's see. You said what the algo is written as a buy. Yeah, no. So I'm not talking about just this is not based off the algo. This is just the breakout for it normally. Because the with the breakout, you don't really care what direction is the entry. So the reason why I'm saying the entry of the direction here for the breakouts because Steven is taking the breakout. He doesn't care about like what the algo is. He just wants to take the breakout by itself. So if you're taking just the breakout, then I mean the algo information doesn't really matter because you're just going with whatever direction. It's only for the 629 though, right? I mean either way you would have skipped the trade. So if you were taking the thing with Steven is he wants to take the trade every single day. Does that make sense? He doesn't care about like skipping a trade. Like yeah, if you were taking based off the algo, you would skip the trade. But the thing with Steven is this is the only trade he's looking to take every single day. So that's why for him there's no skipping. It's just if the trade comes up or whatever the direction is, whether it's a buy or a sell. he's going to take it. We're just looking for like if it's against or with momentum. So I mean, yeah, you could ignore it if you want, but that's only if you're looking to take the breakout. Um, the breakout on open is going to be separate from the algo, right? That's why I mentioned like for me, I never take the breakout on open, even if it's the like the algo tells the direction, because you're going to get movements like this. I mean, it's either going to be really good, like you're going to be really happy with the results of the algo, or you're going to be really upset because it's going to spike you either way, right? Like when you take the breakout, you're either going to win or you're going to lose on the trade. There's there's really no in between, right? There's no point where price will just go sideways and you'll be kind of holding on to the position for a while. Connection loss with NinjaTrader again. I can't wait to get away to get completely away from NinjaTrader. So guys, just another reminder, we are approved for transition to StoneX. So I did send an email, I think, to all of the hedge fund clients. Um, if you guys want me to stop trading on your account like completely right now, just let me know and I'll turn off your account. But you guys can hear from the background, the NinjaTrader has just been having a lot of issues with slippage, connection issues. Just in general, NinjaTrader is not like the best platform to use, especially if you're trading a lot of accounts. Um, we're starting the onboarding process for StoneX. So like for the most part, I think we started onboarding about like 10 people. And over the next couple of days, next couple of weeks, we're gonna try to make a full transition to StoneX so you can get away from those issues. So again, guys, this is the breakout right here. Again, the breakout is different from the regular trade because for the breakout, you're taking the trade every single day. It doesn't really matter what the algo is telling you with regard to probabilities. You just want to know which direction to be trading it in. So if you guys are looking for the 629 entry, the algo list that I send you is based off the algo probabilities. But if you're taking the breakout on open, which is 629 into the 630, you just want to look at whatever direction momentum is going, right? Either with or against. So yeah, just short answer to Mendez's question earlier is yes, if you just want to take that specific entry, then you could ignore the directional bias. But you gotta anticipate that this isn't always going to be the case where it goes, super directly in your favor. But anyways, guys, there goes the first entry for the day, which should be the breakout. The next listed entry is in about 10 minutes, so we'll be looking for that as well. Our only target entry for today is going to be in about 20 to 30 minutes. So you guys are not missing out on anything here. We're just watching as price continues to move along. These are the probabilities for the target entry for today. So the max equity drawdown is 6.4%. This indicates that there's basically a max of like three back-to-back losses that tend to happen. So for example, here you can look at all the statistics from the previous trades. This trade's pretty good. It's been like on paper, it looks great, right? There's like one, two losses, three wins, one loss, one win, one loss, two wins. So for the most part, it looks like it only loses about two times in a back-to-back fashion. Other than that, it starts to really move directional. So the max equity drawdown here is 6%. The total P&L for the previous 20 trades is 38%, total profit of 19,400. The probability for this is 55% for both directions, buys and sells. Profit factor here is 2.426. And looking over here at the trade analysis, so 50% probability for buys, it went 7 out of the previous 14 entries, so only half of them. And for the sells over here, it went 4 out of the previous 6. So 66.67% probability for sells, 50% for buys, 55% overall. And looking over here, so the profit factor is actually pretty huge for sells here. You can see it's a 4-point profit factor versus the buys here, which is a 1.981, which is not bad, but it's not past that two threshold, right? The four here is really where it shines the most. Lastly, looking over here at the average bars per trade, this trade usually lasts for about 10 minutes for both buys and sells. The average for the buys is 14 candles, and the average for the sells is 13 candles. So it's going to last a pretty long while. It's going to take about maybe 13 minutes for this trade to run. And this makes sense because this entry is closer to the mid session, right? So with that being the case, volatility starts to die down. Typically, this is a long hold for this specific position. Um, I actually like this. So, Masij, I don't know if you really looked at this. I think, well, this might be a little too early to take a look at, but for the most part, what I started to realize is that these trades are actually safer when they last a little bit longer. Because if they close too early, like say for example, if the trade runs for like less than 5 minutes, that means that this specific entry tends to spike, right? It tends to spike, and it's not good. I mean, because you get a lot of slippage, right, when it spikes. When the trade runs for about like, we'll see the average. Like the average is about 10 minutes. If the trade runs for about 10 minutes, it means that the trade lives for about, this period of time right here. Or wait, not that. It lives for about that amount of time. And because it lives for this amount of time, it gives you better entry, right? Because it means price will tend to like kind of go sideways for a little bit and then a spike to your target. When it's only like 5 minutes or less, this is what happens. And I've started to realize this is that, you'll enter your trade and then it reverses, right? Or sometimes it'll hit your target right away. And that makes the trade unsafe because it just means that the volatility is too erratic. So what I started to notice is if the trade lasts, at least 10 minutes, and let me show you another example. So this is an example of the target entry for today, but let's show you the example for the breakout, right, on open. Just update this. See the breakout? When it's it only runs for 3 minutes, so it spikes either to your target or it spikes against you. There's a lot of slippage there because it's moving 60 points within 3 minutes or less. Right? For shorts over here, for it to win, it usually hits within the first 2 minutes. For it to lose, it hits within the 3 minutes. So like this shows you that it's a very, very tricky trade in a sense. Let me see if there's another example. So the other entry that we were taking for the previous days was 648, right? And this is what I mean about us always improving, our entries and our edge. See, like this right here, the 648, this is the one that we were taking for a while. This was more of a break-even entry. This trade won, like we did have some profit, but it was break-even a lot of the times. Look at the average bars per trade, right? So it's like if it won, it kind of sat there for a little bit, but then sometimes it would just reverse and it would you lose. So like right here, it has a 7-minute average and it doesn't really consolidate or go sideways at all. It either spikes or it spikes in your favor or it doesn't. So yeah, just something to keep in mind in the future. The average bars per trade. Um, Here, let's see. I'm going to look up the next one that's going to come up shortly. I don't know if this one's been coming up very often. Or here, I'm going to do this real quick. Actually, let me see. This is another entry that used to come up a lot in October, the 7-16 minute candle. I haven't looked. This is my first time looking at this. Okay, so you can see over here again, this one's above like 10 minutes. And looking at the equity chart over here, it's a little it's the profit factor is good, back drawdown's good, probability is good too. So just some things to keep in mind, guys. If you guys are looking, I mean, whenever I see something that's like valuable or makes sense, um, I think it's key because so here's the thing. When we take the entry, we actually, a lot of times I say I don't want it to range or consolidate like this, but I actually do want it to range and consolidate because eventually it tends to go in our favor, right? It might go back and forth for a bit, but then eventually it does move. So just something to keep in mind. Yeah, you should haven't noticed that, but it makes sense. It can probably add the criteria without increasing API costs for the finish of stage three. Yeah, it's just something that I started to notice initially, and for the most part, I don't like the chop, but the chop's actually good because it kind of like lets the market kind of like sit for a little bit and then eventually it'll move in our favor because the momentum usually is correct when it identifies it. And if you guys are looking for yourself, that's something to maybe look at as well. We'll look at examples. So we'll look at when trades come up. So for example, we have a list of entries for today. So we have the next one coming up over here. This is going to be against momentum. I'm just kind of curious to see so we can kind of test this during live markets, of course. So this is going to be the next entry coming up. It's against momentum. Yeah, so I'm looking at this here. This looks like it's going to be a very tricky entry. Like it might work, but I think it would be considered risky because it usually hits within 6 minutes. So that means that it's going to spike either to target or against you very quickly. So, all right, we'll see what happens here. But I'm gonna step away for 1 second, guys. I'm gonna grab some water. If you guys have any questions, feel free to hop into the chat. There's no entries coming up for another 3 minutes or so. So I'll be right back. All right, guys, I'm back. Market's pretty dead. It's like really dead right now. Like Miss E just kind of mentioning how the market looks slow. It's really dead right now. Um, I'm actually shocked it's this dead. We are going into the new year, so I mean, I guess I shouldn't be too shocked. It was kind of expected, but not this dead. Like not where it's not moving at all. Yeah, Daniel said market looks exactly like yesterday. Quick initial push and then chop, chop, chop. Yep. I agree with you 100%. And Masij said it'll pick back up next week. Yeah, I agree. First week of trading, of course, I would expect that to happen as well. So looking at the entry right here, guys, this is the entry at 646. There's actually no entry here because it's for a buy. So going back to our list of trades, this is a no entry. We'll follow it, but there's no entry here. The reason why it's no entry is because it was for a buy against momentum, and we currently have a buy momentum here already. So this technically would be with momentum. Um, the max drawdown for this specific entry at 646 was 8%. Weighted average was 58%. Overall was 50%. Buy probability was 66%. Sell probability was 36%. And the profit factor was 2. So with that being the case, the bias here would have been the ideal direction. But because there was no momentum in that direction, or I mean, there was already momentum, this couldn't have played out for the entry. Yeah, I mean, there's just no entry there. So we'll see. We'll see what's to happen next. So I'm gonna update the spreadsheet. If you guys have access to the spreadsheet, I'm updating them as we go. So no entry for the 629. And there you go, as it pushed right up, right? You know what I realized, Masish? Um, For against momentum, it's actually better when the average candles are less because you're looking for a reversal, right? Versus momentum, where you're looking for it to kind of consolidate for a bit and then continue in that direction. So I think the minimal candle size actually works really well, like something less than 5 candles for the against momentums. But with momentums, you want it to last a little bit longer, like more than 10 minutes. And what I mean, and here's an example of what I mean by that. Just say, for example, this is a with momentum trade, right? Because we have a buy momentum right here. Like, say, for example, you entered a position and then it just, I mean, obviously not this one because the candles are too big. But say, for example, you entered this position and we'll just use this for an example. All right, like say right here, for example, you had a buy signal, and then you say you had a buy entry with momentum right here at 638. Obviously, we didn't, but if we did, this is what you kind of would like to see here in a sense. You would like price to kind of just sit there for a bit and then eventually move in your direction, right? It can move initially, but in a sense where you want minimal slippage, would want something like this to happen, where price kind of just sits there for a little bit. Let me show you another example over here. We're not really going to see many examples here because this is pre-market or this is Asia session where it's like pretty slow. But again, right here, this is like another example. Like there's a sell signal here. It kind of chops up for a little bit. And say, for example, your entry is here for a sell. And then eventually it comes down and hits your target, right? The trade will run for about like 10, 15 minutes. Let's go to like, okay, so here's another example right here. This is like yesterday's session. There's a buy signal right here. And then say, for example, you had a buy entry, which came up like, say, like somewhere around here, right? Price kind of chops up for a bit, but eventually it does end up coming up and then moving in your direction. So buy momentum, um, conti some consolidation, and then continuation eventually. Same with this over here, another buy signal, and say, for example, price starts to consolidate here for a little bit. Say you take an entry right here, maybe goes into drawdown for a little bit, but eventually it ends up going in your direction, right? Consolidation. And the reason why you want this is because there will be minimal slippage. You can have an exact entry right here, and if it chops up, eventually it'll fill your order, then it'll push up in your direction. Before I liked where it just hit your target right away, but that would always cause a lot of slippage in a sense. So there was actually, let me go down the list. There was actually another entry that happened right after. So the 646 over here, this was a no entry, but there was one at 648. It was with momentum, and it was like right here. I don't know if this thing actually worked, but this thing might have stopped out. Here, let's check. I'm gonna check the statistics on that one. 648. This is actually one of the entries that we just looked at this one actually. Yeah, so this is the one that we just looked at earlier and we were talking about. This is the 640, or no, sorry, yeah, 848. So again, this trade only ran for like about 2 minutes, right? Let's look at the trade analysis again. See, this is one of the entries I was just talking about where like if it's below 10, the average, it's not really a good trade because you get chopped out. That's what I was trying to like get across to you guys right here. This is what you don't want. You don't want to get chopped out of position like what happened right here, right? Because if you took this position right here, it looks like you would have gotten chopped out and then eventually it might move in your direction. But because there's like such heavy chop, meaning the first initial candles after the candle actually opens, it chops up too much, you can easily get stopped out before it pushes in your direction, right? So that's what happened here. See how it got chopped out? And then it ends up going in your direction after. Like this is what pissed me off like for the past, 2, 3 weeks because we were taking this entry at 648 and a lot of the times it would just chop you out and then it would go in profit. So this is just another example of like why I would decide to look for trades with, or not look for it, but it would be more of I'd be biased towards taking something that has more than a 10 bar average. and we're on the minute candle. So if you see seven, that's 7 minutes. If it's 10, it's 10 minutes. If it's 20, it's 20 minutes. Um, yeah. So let's just keep following and we'll see. We got another entry coming up in about actually our actual entry is coming up soon. See if it actually comes up. CJ said, I think people are getting their New Year's Eve celebrations started early. It's crazy. I went to one of our like outdoor malls that we have here in California, and it was like I forgot that people were out of school and out of work because it was like a random Monday, right? Like middle of the day, and it was so busy. It was like busier than it is on the weekend. And I was like, where are all these kids coming from? And I was like, oh, duh, it's like everyone's is ready for New Year's Eve early on. It's crazy how this year passed so quickly, right? I feel like we just started 2025. Um, and the thing is, for those of you who have been trading with me every day, we've traded a lot, right? We've traded every day for the past year. I mean, we've been doing this for like 8 years now, but for the new people who actually traded with me every day for the past year, it's a lot of trading. Um, but it feels like it went by super quickly. So yeah, this year's about to end. Hopefully everyone's ending the year in profit. Uh, I haven't really taken very many trades in the past couple of days, because there just hasn't been entries. But yeah, I was hoping we'd get something today. So we have the target entry coming up in about 4 minutes. I don't think there's going to be an entry for me here, guys. The reason why I say that is because there's no momentum in my direction, and the entry's for a sell, right? If you guys are looking at my list of trades, the entry is for a sell. If this entry over here doesn't, oh God, entry again. I cannot wait to get off NinjaTrader with the connection loss here. Let me check to make sure all the accounts are okay. I'm not going to miss that sound. Connection lost with NinjaTrader. But anyways, back to what I was saying. So our entry is coming up in a few minutes, guys. I don't think we're going to have an entry. It's going to be a no entry. The reason why I say that is because I'm looking for a sell here, and it's going to be with momentum. We don't have a sell signal here yet, right? So with that being the case, there's not going to be an entry here. Um, I guess at this point I could probably share the list with you guys because there's nothing to take here. Um, yeah, it's just going to be a no entry. So the trade that we had listed over here was going to be at 659. It was a target entry. It had a max drawdown of 6%, overall probability of 55%, profit factor of 2.4. This indicates that for every loss, there's 2.4 wins. Since we're doing a 1 to 2, this is more so of a 4 wins. So for example, for every loss, you would make four R multiples. So for 1 R, you make 4 R because it's 1 to 2. The total gain with the past 20 trades was 38%. Profit for that's 19,400. Looking at the trade analysis over here for buys, it's 50%. For sells, it's 66.67. If you guys want to take this for a buy, you guys can still take it. I mean, for me personally, obviously it goes against my criteria, but the probabilities here do indicate that buys, they still work. They don't work as well or as often. Um, the average bars per trade here is 10 minutes. For every winning trade, it runs for 13 minutes. For every losing trade, it runs for 6 minutes. Um, profit factor for buys is 1.981. So, this number here is not super great for buys, but for sells here, it's pretty good. It's 4.0. So like I mentioned earlier, the profit factor here for both directions is 2.4. If you're only taking sells, the profit factor is 4. So this means for every loss, you make 4 wins. And if you're doing it based on R multiple, for every loss, it's 1 R. For every win, it's 8 R. So it's basically a 1 to 8 risk to reward in a sense. That's why I was aiming for a sell here because the R multiple is very high, right? So it tells me that, okay, if I take a loss here, I have so much. edge in my favor that if I do take that loss, the next trade's likely to win and you're going to win big. Not win big, but you're going to win, obviously. And then looking over here at the equity chart, you guys can see that that's the case here, right? Let's look at the list of trades. So you can see over here, the last entry on the 29th was for a sell and it won. See the losing trades here? Yeah, there's a loss for a buy and a loss for a sell right here. But if you look over here and you keep going down, like there was a lot of long trades here. And they were kind of mixed, right? It was like win, loss, win, loss. For the shorts here, they're mostly wins for the most part. Like for example, here you have one, two, three, four wins here to one loss for a sell. And then looking at the previous history, if you just keep going down the list, right? So there's one win right there for a sell. And there's only so many sells here. But for the most part, if you just took all the sells, it would have yielded pretty good profit because there was six trades for sells. It won four out of the six. And that's how you get the profit factor, of course, right? You just do the math. You just do 4 divided by 6, or 6 divided by 4, actually. All right, so unfortunately, there was no entry here. As you guys can see, price is now starting to come down at 659. So the momentum here identified it as, a drop to the downside. Unfortunately, it just didn't meet the criteria. So there's no entry there. Let's see. Hey, Sam. Dennis said PMI news was above better than expected. That's what caused the move to the upside. Okay, no, it's good to know. Let me check that real quick. Yeah, so Chicago PMI medium impact news over here was at 645. It was bullish. And then looking at the 645 candle right there. Yeah, so it stayed flat for a little bit right here. And the market finally reacted to it on the next follow-up candles. But yeah, so looking at this so far, guys, this entry over here was for a well, I mean, there's no entry there. We were looking for a possible sell, but there was no sell momentum which came up. I'm kind of curious now to see how this here ends up pushing through and playing through. Um, Let me follow through over here real quick. So there was an move here. I'm updating the spreadsheet as we go. 658. No entry. Entry. So we have another entry coming up here. I mean, this is the next one. 716. All right, so the next entry is coming up right here at 716. Let's take a look at how it looks like on paper. So it has a 7% max equity drawdown, 55% overall probability, profit factor of 2.4. The buys over here have a 62.50% probability, and the sells here have a 50% probability. Average bars per trade is 11 bars. So this is what I was talking about earlier. I think this is a good metric to kind of look at. Looking over here at the profit factor. So profit factor for buys is 3.3. Sells over here is 1.9. So okay, we have an entry coming up later at 716. This is I can share the list with you guys now because all of our trades are done for the day. There's no entry for today's target entry. No entries at all this week. I mean, this was kind of expected. Like I mentioned, this week is not the best week to be trading. I'll still be trading next week, or not next week. I'll still be trading tomorrow. So we'll see where this is. Let me check the chat real quick. Let's see. Masij said, yeah, it makes sense. Maybe we can have against as targets, but just with those requirements. Yeah, I agree. Masij said, I've been looking at London session recently. I'm liking it because it's more volatile than Asia, but still directional. Yeah, no, I agree with you. Asia is actually pretty good. Um, I'm not Asia. London is actually pretty good. The London Open is good, right? Because it's very directional. It starts to kind of flatten out later on in the session, though. So, for example, here, if you like to trade London Open, this is London Open right here from midnight my time. And it's good for like the first couple hours, then it starts, or the first hour actually, and then it dies out. It's not always like this though. Usually it'll go on for like maybe 1 or 2 hours, and then it starts to die out. But you can see over here for London session, it pushes up, flattens out. So directional push here for London Open. Similar to New York. It's not as crazy as New York, right? Sideways move and then drop back down. This is kind of similar to what I was talking with you, Masij, and Elad in the thread, right? This is what I was talking about with minute. So this is if you guys are familiar with accumulation, manipulation, distribution, this is a clear setup for that, right? So right here, this is accumulation or price goes up. This is manipulation or price starts to chop up. And then this is distribution where price sells back off. It's just a pattern. If you guys are familiar with that, it's just a basic concept that price will tend to, like people will tend to push price in a direction, and then there's going to be uncertainty, and then people take profit, right? And they sell off, price goes down. Um, a lot of people will say accumulation, manipulation, distribution is like it's a new concept or somebody created it. Nobody created it. It's been around for before the Dow was even created. I think it's called Dow theory. Yeah, it's literally Dow theory. That price will move in a direction and it'll range consolidate and then it'll sell off or they'll take profit. Doesn't happen every time, but um and the thing is like it looks good after the fact. So after it's happening already, you're like, okay, it looks good, but when it's actually happening, you don't really see it happening real time. It's kind of similar to what happened right here too. So like, or if you wanted to like look at it from this perspective, this could have been the accumulation, this could have been the whole manipulation, and then New York session, the distribution back down, right? That's where the sell-off actually happened. So that's just it's a classic concept in trading. I've studied Dow theory for a long time. I understand how Dow theory works. The thing is that it doesn't really look good when it's actually happening, but it's good after the fact. That's why you'll see a lot of like trading gurus. They'll try to say that they see Dow theory happening, but it's not easy to catch when it's actually happening, right? Like this stuff is obvious and it's clear because it's already happened. But again, if you wanted to apply Dow theory in a situation like this is another thing. Like price came down. This is the accumulation phase, this is the manipulation phase, and this is the distribution. Right? People sell off, consolidates, people buy back in at the dip. It's good when it has happened already, but not when it's actually happening. So don't try to get bought back. I know there's people who sell that strategy, right? They call it what is it called? AMD, accumulation, manipulation, distribution. It's a strategy that you can use yourself. You don't need any tools for it. Um, you just have to be able to spot it. So again, right here, this is it happens on the micro level too. So for example, over here, price pushed up, like this could be the accumulation level, this could be the manipulation level, and this could be the distribution level, right? Where price is coming down. So like people always they try to use this strategy on higher time frames. You can use it on any time frame. You can use it on the 1 minute. You can use it on the 1 second if you wanted to. If you really wanted to go into a granular level, you can go down to like, the 1 second chart and you can see it happening. It's just whatever you're looking for. If you're looking for it, you're going to see it. But if you're not looking for it, it just becomes one of those concepts that kind of that people try to act like they know everything about it, but it's nothing special. So we used to use that as a confluence for the breakout on open until I realized that it's not really a good concept. It's a bias concept. Yeah, Barack was actually the one that mentioned it before. Like Barack used to use it and then he realized like, okay, this is actually not that good. It's not good as a strategy on its own. It's good as a confluence, like if you're looking after the fact, but It's not like something that's great because Barack is always bouncing from strategy to strategy. He's not here right now, but Barack is always. I feel like every week he has something new he's doing, which is not a bad thing. It's just it's hard to find consistency if you're bouncing from strategy to strategy like that. All right, so we don't have any entries really coming up until 7:16. Let me check the chat real quick. Essentially ending the year crippling debts and Ninja Trader. I think a lot of people are right. Thanks for the breakdown, Masich, for profit factor. I always got that mixed up. I was looking at the what I was looking at was actually win percentage, right? Because I was calculating the wins to the losses. It's really the profit to losses. Yeah, no, I agree. iPhone is asking, I have a question. Why do we enter on the following minute candle usually, but on the list trade on the listed trades, it has the entrance. No, so this isn't here. I'll put the listed trades up here. The list of trades aren't the entrance. It's literally what you just mentioned. It's when the candle closes. So here are the trades for today. It's always been like this. It's never been the opposite of what you mentioned, iPhone. It's always been the candle close. So like 629 here, this has always been the breakout, right? The breakout open. It's this is when the candle closes. So 629 means the candle closes at this specific candle, and then you take the one after it. Because you that's your catalyst, right? Your catalyst is the candle closes, you enter the buy as soon as that candle closes. So like for example here, 629, you'd be entering on the close of the 629, which is the open of 630. Same with this one over here, 659. We would have taken the 659 close um, into the 7 o'clock candle. Let's see. iPhone said, if I'm being honest, I don't think the trade analysis is waiting until the last second to take the trade. What do you mean by that, iPhone? Because you have to wait for the candle to close. These tests can't be run on open candles, right? So I'm not sure what you mean by that. Like there's I don't I'm confused about like what you mentioned there. Because that's what the strategy is based off, right? That's what every strategy is based off. It's based off the close of the candle for the most part, right? Like for example, if you're trading the momentum scalp, right? You're looking for a momentum candle to close, and then when the candle closes, you enter. Same thing we've been applying for years, right? It's the same thing. It's just you wait for the candle to close. As soon as it closes, just where you take your entry. Same with the MPSV2, right? There's an MPSV2 which came up right here. There was a sell signal, retracement. This candle closed. So if you're taking an MPSV2, the MPSV2 would be at 702, right? So as soon as this candle closed, that's where you take your entry. So I'm not sure. I'm trying to understand where your thought process is, but it's always been on the candle close. I mean, if you look at any of the strategies, a V1 variation, right? Let's use a V1 variation, for example. If you have a double wick right here or a double body, when do you take the V1 for variation? You don't take it on this candle, you take it on the close, right? So the V1 variation would be at 653. It'd be on the open of 654. So the same concept with the algo, it's not nothing different. It's the same the same concept that we've been looking at for years and years and years. It's always been on the candle close. So let's see. iPhone said I was referring to the trade analysis times, not the ones in the chart. I was looking at the enter and close times of those trades. Yeah, yeah, of course. So let's see. Let me show you real quick. Let's see. So this trade is for let's go to a previous one so I can just kind of show you. Yeah, and I'm glad you're bringing this up. If you guys have any questions regarding the tools, there's no wrong questions here, right? Just ask the question. I mean, the question may be inundated, like someone asked about coin flip question a couple of weeks ago. Those types of questions, I mean, they're not, I'm not going to say that there's not bad questions, but for something like that, it just, it's common sense that like flipping a coin is not going to make a difference, right? But with this, let me show you real quick. So this entry was at, okay, 912, right? So 912 over here. Um, yeah, so see right here where the candle entry happens? And let me show you again right here. So So we have the 912 entry here, iPhone. See how I mean, it's not showing right now, but basically, see this little marker here, this red marker? This red marker means that's where the entry happened for the short, right? It shorted 10 contracts at this line, right? So this line happened at the close of 812, right? It says 812 here because that candle closes at 812, and that's where it opens up. Does that make sense, iPhone? So this goes back to what we were just saying. If you were saying that it happens at the previous candle, then the sell would happen up here, right? Because that's when the candle opened. But because the candle closed at 812, that's where the entry happened right here. That's why over here it says 812 because it happens at the close of the candle. Does that make sense now, iPhone? I'll show you another example if that one doesn't make sense. Just let me know and I'll pull up a different uh a different candle example. Maybe this one here is not going to be a good one. Let me show you this one at 708. So I'll do 708 because this one's like later in this, or it happened earlier. So let's update this again. Okay, so same thing right here, right? So 708, that's the time that I put. See, if this happened on the 708 candle, like you said, this red line would happen right here, but it happened on the close of the candle, right? So the reason why we're saying that is because we have 708 here. This would be the target, or this for the listed entry, it would say 708 here, right? And see how there's a red line right here? That means that when this candle closed 708, this means 708.59 into 709. That's where the entry would have been taken. Does that make sense, iPhone? I'm just trying to show you so you understand it. Because I think what you're saying is that the data here shows that it happens before it, but it doesn't. It happens after it. If that clears up confusion for you. Like if there's a candle that you want me to show you, for example, I can pull up the exact time. Just tell me what time that you think where it's wrong. Or yeah, iPhone said, okay, got it. Entry is at 59. No, it is at zero. It's in between that. So when the 59 passes, that's when the entry happens, right? That's why the candle over here. So like 708.59, as soon as that 59 closes, like when the countdown's done. So let me show you the countdown right here. The countdown's like right here, right? It says 54, 53, 50, whatever. When it goes down to zero, that's where the entry happens. So it does happen at zero. It's like the in between. So as soon as that candle closes, that's where the entry would come up. Yeah, Masij said we enter at 59 because it takes about a second to get into the position. Yeah, exactly. So like when that 59 happens, that's where you're like, okay, buy or sell. If you're entering a market order, that's where you'd enter. Or if you're doing a limit order, you would just drop your position like right there, right? Like right on the dot. Or in a situation where in a situation where the candle will kind of chop up in a bit, you can always just like let it drop there, and then if it fills, great. If it doesn't fill, then you're okay because it just doesn't fill. Again, this is a 708 entry right here. This is what I was talking about earlier about the average candles or average bars per trade. See how this one is a 10? This trade was a really good entry for a sell because it would have sat around for a bit, but eventually would have hit. So I'm gonna see here's like another example of that minimum, or not minimum, but just the average bars per trade. This wasn't a listed entry, but I just want to show this as an example. I'm curious now to keep looking at that whenever a trade opportunity comes out. Yeah, okay. If there's still confusion, iPhone, just let me know. Again, if you guys have any questions, I'm here to help. Like I'm not here to argue with anybody. I'm here to help you guys out. If there's something you're confused about, if there's something that like you don't really get, or if you want uh some clarification on a certain process, just let me know. Me helping you helps me sometimes because sometimes I get to catch mistakes, right? Maybe iPhone was right. Like maybe the trade analyzer here wasn't identifying it correctly. If we're able to identify that, we can fix it, right? That's the main thing here, of course. So the 716 entry right here that we were looking at, guys, there's actually no entry there. So this was with momentum. It has 7% max drawdown, 58% weighted average, 55% overall, 62 for buys, 50% for sells. This here was for a buy because there was no buy signal here. There was no entry for 716. So I am going to put a no entry there. There's a lot of no entries for this week, guys. I mean, this was expected because this is New Year's week, but but this is where we're at. I mean, this is pretty much what we expected for the most part. I'll show you guys the list of the spreadsheet basically. So here's the spreadsheet for today and for this week in general. You guys can see yesterday there was like literally no entries. There's just no entries for the entire day. We don't really calculate the against momentum, but looking at this, literally no entries for the entire day yesterday, and then again today, no entries. There was a loss right here, but this isn't a target entry. It's just one that was listed. We're still going to document it because, of course, we want to have an accurate depiction of like what's actually happening in the market. These are our target entries for this week. There's pretty much no entries. So the last 2 weeks of December have been very, very slow for the most part. You guys can look at our target entries here. There's not very many. Yeah, there's not very many at all. But again, this was expected. This is the end of the year, so volatility is pretty low. Um, and we'll just keep following through. So this entry here at 721, this is actually one that I wanted to take. So let's go to that entry right there, actually. I wanted to take this, but it didn't meet my criteria. So if you guys are familiar with the criteria over here, let's back up a little bit, make some space. So here's the criteria for my algo target entries. The 721 entry over here, this was it has a 9% max equity drawdown, 59% weighted average for overall plus for sells. Overall 55, buys have a 44%, and sells have a 63% with a 2.23 profit factor. With that being the case, this entry here is one that I was looking for because the numbers on paper look good. The reason why this is not a target entry is because the weighted average is not above 60%, right? If you look at my criteria over here, it's enough to be minimum criteria, but not enough for it to be a target entry. And then on top of that, we have pending momentum here, right? See how there's pending momentum? That's what we call flickering momentum. It indicates that the direction of trend and the direction of momentum is not consistent. So. Yeah, I mean, I would have taken this trade here. This would have been the other target entry for the day because it's the closest one, right? There's nothing else here that's close that's anywhere remotely close to where we need it to be. 716 was like slightly close too, but it wasn't there, right? There was no entry there. All right, let's scroll up real quick, see if I miss anything here. Yeah, so Ms. Siege said, yeah, people overcomplicate the market. It's not a mystery. The whole market is just supply and demand. That's how you look at it. Yeah, exactly. 100%, Siege. I agree with you. See, the market is really supply and demand in a sense. Not in supply and demand that the way people are teaching it, right? If you see how people teach supply and demand, like anywhere, everybody teaches it differently because there's no one way to look at supply and demand. Supply and demand is really just looking at like, the buyers and the sellers in the market. It's an auction theory. Um, and that's where the momentum comes into play, right? That's why the algo over here is so powerful in a sense because we're able to kind of identify where the supply and demand is actually happening, right? Like when you see these against trades that are listed, this is usually where the reversals tend to happen, right? So like if you look over here, you look between 630 and 646, see around 630 or the market open, see how price reversed to the downside? The algo pretty much told you a reversal is likely to happen on that period. Same with 646, right? Let's go to 646. See right here how price was consolidating and then it shot up. in reversal, that's where the momentum like really shines. It kind of tells you, or that's where the against momentum shows you where reversals tend to happen. So we'll look at this again. We're gonna have more reversals coming up at 739, 740. When that happens later on, look for a price to push in a certain direction at that point. Um, but yeah, I mean, there's no entries here right now. Obviously, this one wouldn't have been a trade taken because of the flickering momentum, like I mentioned, at 721. We're probably still going to document it in the spreadsheet because we want to have it documented, but it's not a trade that would have been taken, of course, because of that specific reason. It just doesn't meet the criteria. The criteria is there for a reason, right? We're not, the criteria isn't there to like cherry pick trades. It's there because that's the criteria that I've come up with, and that's what I found to be very useful in a sense. Let's see. So Paul got into the 659 entry, looks like. CJ said he was in the 655 entry from the 5 minute. Didn't realize he had to go through 3 sessions for his TP to hit. He's in profit, but he's fine too. So CJ actually got in at 655. Were you in it for a sell? I know you're on the 5 minute, CJ. Yeah, I'm assuming you're in for a sell because your message was at 707, so you're still in that position. So it looks like you probably got into this at right here, and you're pretty much writing it down. And I'm assuming you were taking it with the bigger targets, like 60 to or 50 to 100 or something like that, 40 to 80. Oh yeah, you do 40 to 80. So it looks like your position there would have hit, CJ. For CJ, different parameters used because CJ trades on the higher time frames on the 5 minute. And this right there looks like that was CJ's position. Okay, nice, nice. Okay, that makes sense. Makes a lot of sense. Well, nice work on catching that right there, CJ. Paul was in the 659 entry as well. 659 was, I'm assuming you were in that for a sell as well, Paul. Yeah, so Paul over here was in at 659 and applying, okay, yeah, so Paul lined this up with the 10-minute snipe entry. So, yeah, if you guys want to use different time frames and different strategies in conjunction with the momentum algo, I mean, feel free to use it, right? I think that does help a lot. If you guys have some sort of like, so your trades will be pegged against the momentum algo, but then the actual trade strategies are part of the are part of the confluence for the most part. Yeah, no, nice work on that too, Paul. Yeah, Paul said yes. I didn't take the snipe because I didn't notice it since I was in the 630. Yeah, of course. So Paul here took the entry here at 659, and then he ended up holding on to it because the snipe lined up with it. So that's one thing to look at too, if it's something that you guys are looking for. There was actually a lot of entries here which came up. So Paul said that there was a snipe entry which came up at 659. There was also an MPSV2, right? Sell signal retracement confirmation on this candle. So if you take it right here, I mean, you could still make profit on these trades. There was a lot of different entries which came up here. So if you guys remembered, this is typically how this is what we're looking for almost every time, right? So when you're looking for an entry like this, there's three different strategies that you can kind of look for. It could be a momentum scalp, which would happen right here, right? This could be a V1 variation. There could be another V1 variation right here. And this could be a momentum pullback scalp. So if you're looking for an entry here, you'll have basically four different opportunities. Momentum scalp, V1 variation for retracement, V1 variation for continuation, and a momentum pullback scalp. If you guys see this here, and I'll show you an example. So, for example, right here, let me show you. There was a momentum scalp which happened right here, right? So this would be the momentum scalp, and I'll show you how these patterns work. And then right here, this would be basically a V1 variation. It's not always going to be clean, but this is like an example of like what to look for if you're looking for these entries. Momentum scalp, V1 variation, price pushes up. You have this buy signal here, which comes up, and then right here, there's a double body, double wick. This is another V1 variation, right? And then right here, we have a sell signal. And this right here would be a momentum pullback scalp. See how it lines up? And the thing is, if you're looking for these entries, you can just line up the algo entries with it. Like if you see an algo entry lining up with one of your entries at this point, you can always get in and follow it through. Because if you got in for the like Paul got in for the entry right here for snipe, it's on a higher time frame. But if you're to tie that in with the momentum pullback scalp, you actually have a pretty good confluence here. Because the same pattern where it goes down, retraces, comes back down for continuation, it lines up with what happened here, right? Price came down, retracement, continuation. Literally the same pattern, but a little messier here. So yeah, if you guys have access to my strategies, I mean, feel free to look these up. These are like classic strategies we've applied for years and years and years. I created the V1 variation strategy maybe maybe like 5 years ago, 5 or 8 years ago, and they still work till today. This is the oldest strategy though. The momentum scalp, this is the very first strategy I created. And you can see here it still works pretty good, like pretty great actually. It works pretty good. Like the momentum scalp happened right there. That's perfect. And then the MPS V2 came up a little later. This was actually an idea that Brock brought up to me. This is why I mentioned before, Brock always has a different strategy he's applying. So it's hard for him to find consistency. But when he ever has an idea that actually makes sense for me, I usually I use it and then I make it better. That's where the MPS V2 came up from. So yeah, let's check the algo here. So the algo again. Um, Yeah, and so the algo we had the 721. There was let me just keep updating the algo as we go. But yeah, like what I was saying, if you guys have any trade ideas, like feel free to let me know because I've been trading for so long that I know how to improve strategies very well, right? If you guys ever show me a strategy and it actually makes sense to me, I'm usually able to use my experience and knowledge to make it better and make it my own in a sense. Yeah, because the MPS V2, we had basically two different versions of it, right? The V2, the MPS V2 and the regular. The first one was good with whole numbers, but then I realized that the whole numbers don't really matter, right? It's really just on the price action. This entry over here at 721, it's still running. I mean, this trade's probably going to run for a while. This is the same entry. So this is the one that I was actually looking to get into earlier, guys. The volatility is really low. So like I mentioned earlier, I wanted to get into the 721 entry because I thought it was good. The numbers on paper look good, but the problem is that the weighted average wasn't close enough. It was close, but not close enough, right? I needed it to be above 60. It was at 59.32. So there's really no entries here. There's one right here at 725, but it overlaps. So you basically have two strategies. They're fading each other right now. Basically have two strategies running alongside each other. There's a 721 and 725. The probabilities are higher on the 721, so I would have gone with the 721 versus the 725, but they're both just not, they don't meet the criteria. Neither of them are above 60. And then we have the reversal trades happening over here. So the reversal trades right here are going to happen at 630, 739 and 740 around that point. I just saw your message. the coin flip. Let's see. Jesus said he took the snipe for 2040 risk to reward on the big candle, and it stopped him out. Um, did you what time frame did you take the snipe on, Jesus? Yeah, because like Paul over here mentioned, the 10-minute is normally 40/80. The snipe is hard to apply on the lower time frames. It's meant to be taken on the higher time frames. Okay, yeah. I mean, there's no problem with taking the snipe on the lower time frames, but that strategy is meant to be taken on the higher time frames because you want a better confirmation. But there's no problem with applying it on the here, let's see. I'm gonna look at like where your entry happened. So you got in at 724. Did you apply the original snipe strategy? Because I'm looking over here at 724 and I don't actually see a snipe entry. Well, there is a snipe entry right here actually, but it's let me see. You got in at 723. Because I'm looking back at here, I don't actually see a snipe entry here at that time. The snipe entry actually would have happened well, I mean it could have happened earlier. No, I would actually call it over here. So the snipe entry from what I'm looking at would have happened. Actually, no, this wouldn't even be a snipe entry. It would happen right here at 720. You're using the actual snipe strategy, right, Jesus? Because so the way that the snipe strategy works, here, let me go over here. I need to add the SRV2. You don't need the SRV2, but so I can show you guys where the structure is sitting. Yeah, so I actually don't see any entries over here for the snipe. The snipes are happening up here, but so if you guys are familiar with the snipe strategy, and I'll show you here on the 1 minute. I actually don't see anything here on the 1 minute. So like what you would need to have here, not a snipe. I thought it was the same thing. Okay, let me show you guys. This is an old school, like this strategy I used to apply like maybe like 5 years ago. It's a good strategy. The problem with it was that it just didn't come up very often, so I would get impatient and I wouldn't take it anymore. There's a lot of people here who have been around for a while. Like Paul's been around since COVID and he's familiar with it and he's used it before. It was a really good strategy. It still is a good strategy, but it was a good strategy to me at one point. The way that this strategy works, is basically you're look and the reason why I was looking at this right here because this here would have created structure, right? So the way that the snipe strategy works is you're looking for direction of momentum. So we have a sell momentum right here, right? Price is coming down. We also have direction of trend where price is coming down here below the pivots. The pivots are spread out, so this indicates that it's in a bearish trend. If I was to turn on the trend meter, this would be another confluence, not necessary, but if you turn on the trend meter here, I'm sure that the trend meter would show that it was bearish. So right now it's neutral because this is for the intraday. But if you change everything to the 1 minute here, this would indicate that it's bearish. I'm pretty sure. Yeah. So see how it's red down here? So basically you have a bearish trend, you have bearish momentum, price is coming down. What you're looking for this snipe entry is you're looking for price to come up and bounce off one of the pivots, right? Typically like the pivot would have to line up with structure. So we had structure here. This candle right here rejected off the structure and the pivot. That's what makes it a snipe entry. So for here, this is where the sell would have happened on the close of this candle. And if you're doing a 2040, like what Jesus mentioned, this trade actually would have been still running right now. Yeah. So this is an example of the snipe strategy. If you guys want to go back and review it, there's videos explaining the strategy. I just wouldn't really recommend doing it on the 1 minute because it's so noisy in a sense. Works a lot better on like a higher time frame, like a 10-minute. Let's go over here on the 10-minute real quick. So see here how it's a lot cleaner, right? See the rejections right here off the pivots? It's a lot cleaner. Let me see if I have the SRV2 here. Okay, so here's a pretty good example here. So You guys can see here how we have structure, right? The structure was identified using the SRV2. So using the SRV2 over here, I have drawn structure there because we have, see how there's a box right here? Let me turn this off. So see how here this thing lines up perfect, right? This candle doesn't reject off the structure and it has to reject in this within the same area. So see how the pivots here kind of align? There's a green pivot right here and it aligns with the structure, right? So this is a snipe entry. You have a sell signal there, price rejects off the pivot, rejects off the structure, and your entry would happen right here for a sell. And that's what makes it a snipe entry because a lot of times it doesn't have any drawdown, right? That's why we call it a snipe entry because you're looking for a lot of confluences here, rejection off structure, basically two structures, rejection off pivot and rejection off the resistance or whatever you want to consider it. And then it comes down like that. But yeah, Jesus, and then again right here, the trend meter is also red. So you have it gives you a multi-confluence confirmation that the trade's likely to continue pushing down. So yeah, if you guys want to apply the snipe strategy, it's a good strategy, but I do highly recommend applying it on the higher time frame so there's not as much noise. There's just too much noise on the 1 minute. Here, let's see. Let's go down to the 1 minute, see what it looks like here. So if you're looking at the 1 minute, this is actually the entry that Paul took. So what Paul did is he marked it up on the 10, but he looked for the rejection over here on the 1. So we had a sell signal, the rejection right there. The entry actually would have happened a lot earlier. So there's different ways to analyze it, right? We had the structure marked up from the 10, um, rejection right there on the 1 minute, and then he would have got in for that sell. So it's a good strategy. I mean, it's a really good strategy, actually. It's just the work that takes to identify these types of entries is a lot more than you would typically have. But yeah, I mean, that was a great entry right there, Paul. Now that I'm looking at it, that's actually really, really good. Marked up structure on the 10, identified the actual entry on the 1, and it lined up perfect. All right, so this algo entry is still running. I'm not expecting too much to happen here, guys. Volatility is very, very low. Yeah, Paul said he waited for the bearish momentum to close on the 10 as a final confirmation. It's perfect. All right, cool. Yeah, if there's anything else that you guys want to, if you guys want me to identify anything, feel free to let me know. I'm gonna take off the trend meter here. I just try to keep this as clean as possible. I don't want too much stuff going on here. Um, Rashida is asking what's the TP on the algo entry. If you're looking over here at the 721, Rashida, the TP is at 48,580. That's a 60-point move. It's on its way down still. So I'm going to put this over here. It's still running. I'm not going to count the 725 because it's an overlap. I'm putting it in the spreadsheet right now. All right, let me check the other chat. So question from Sam. Sam said, shot in Pine Script, do not consider stop loss unless the body close above or below stop loss. If it is a wick stop loss, but body closes above or below, do you consider a stop loss? In Pine Script, how do you solve it? Um, so that's where it becomes an issue a lot of times, Sam. Like if you're trading during a choppy market, like for example, the open, right? This is why the open is hard to it's hard to identify um the actual accuracy of the breakout on open, right? Because like you mentioned, sometimes market chops so extremely, right? Like sometimes you'll have a candle where it's above and below, and the pine script won't identify it correctly. So the only way to solve that is if you go on the lower time frames. But then again, you can only go so far on the granular level, right? So like for example here, if I was to see that choppiness happen, and I'm trying to look for a crazy candle here, but there's no crazy candles like that. But if I was to see that where it hits the stop loss and the target, and you don't know if it's like actually a win or a loss, you have to go down to like the 30-second or the 10-second or the 1 second in a sense to see like when it actually hit or when it actually lost. So typically, like when I have a trade like that, or in the past when I've had a trade like that, I would go in, I would actually document it myself in my journal so that I know if it was a win or a loss. But there's no way to really fix it with Pine Script. I mean, there's not even a way to fix it with Python, I don't think. Um, Unless you have it running, like you have the actual trade day running. The only way that you can do it, and this is from what I've learned from other, hedge funds that need that type of data, is they would create their own markets basically. Like they would mimic the replay of the market by the second. So like they'd create a separate, basically a copy of the market, and then they would run their engines through those markets, like if it was like a real day, but in fast, like in fast forward time, right? And stuff like that costs a lot of money, of course, because you think about it, like and Masij would probably be familiar with this too. Like, the API costs for to run an actual market, like it was happening in real time to pull the data it's crazy, especially if you want to do it by the seconds. So yeah, that type of testing is not really available to the average person. Um, so you just have to like go with whatever happens with your testing. Your testing is never gonna. The thing that you want to keep in mind with your testing for PineScript and TradingView is that it's not always going to be super. It's not going to be super accurate, right? There's always going to be some discrepancies. That's why for me, if you guys see my criteria here, like my criteria is really high, right? It's really strict, but I do this to factor in basically technical issues like what you mentioned, Sam. So like for example, I could go for like maybe a 50% or maybe a 40%, but I kind of factor in mistakes, right? So if there's like a few trades that are mistakes like you mentioned, I want to factor that in. So like I'm going for 60, but it could really be like 55 or it could be like 50. So yeah, you're not alone. It's the thing is that doesn't happen very often, right? The only time that really happens is when news comes up. And I don't trade news, so it doesn't really affect me. But before I used to try to create a strategy based off like news and stuff, right? Let me see if I could find a news channel that spiked, which I think happened, I think on Christmas Eve, I think. Yeah. Yeah, Messi it cost tens of millions. Yeah, it's super, super expensive to do something like that. So there was a big spike right here, but it wasn't a spike candle where it happened both ways. Um, but yeah, that scenario that you mentioned, Sam, it doesn't happen very often. It happens, but it doesn't happen very often. So like I'm looking at the data more recently. I don't think we've had a candle like that in a long time. I know this happened a lot last year. If you guys remember, we traded a lot last year and stuff like that would happen. Yeah, because these are they're directional. Yeah. So basically what you want to see to see a scenario like that is you want to see a big wick on the top and a big wick on the bottom, double wicks, right? Because when you have a candle like that, it will show that your trade might have won, or it'll show that your trade might have lost, but you don't know if it actually lost or won, right? Because PineScript doesn't differentiate whether the stop got hit first or the target got hit first. But yeah, thankfully we haven't had candles like that, so you're probably not going to run into those issues very often. But that type of candle happened back in like COVID, right? I think COVID, if you look at the candles back then, you get these huge spikes that have happened around like CPI, PPI, NFP. Those were the days that like you'd see the big spikes in both directions. You don't have that now though. I don't remember the last time we've had a crazy spike like that. It was probably the tariffs, right? I think the tariffs is when that happened a lot too, because we had, the Black Swan event sort of where the market kind of spiked like 100 points both ways. So like for example here, you get a big spike, but you only get a spike in one side. When you get a big spike on both ways, it's like, okay, if your target's right here, you're like, okay, did it hit my 20 up here or did it hit my 20 down here? So yeah, just a quick explanation for that, Sam. I was hoping I'd be able to find an example for you, but we just haven't had a big spike candle like that um, in a long time. Mainly because the government shut down, right? Yeah, Sam said, yeah, this was. The reason I stopped trusting Pine may look into again. You've been super helpful. Yeah, no problem, Sam. What I would say is give yourself um I forget what Masish called it, but it was like a standard measure of deviation based, or like, like give yourself some percentage or some room for mistakes because there's going to be mistakes. There's always going to be mistakes. So even in your own analysis, right? If you ever want to like have a realistic view, like for example, here, this thing has a overall percentage of 55. I would probably drop it down 10% to account for like maybe an extra 5 to 10 losses, right? Even though there's no 5 or 10 losses, you want to dumb down your strategy a little bit to not give you like because there's no way you're going to find a super strategy. It's impossible. You're always going to have some sort of risk involved. Nice. Let me see. Rashida said she's in the trade TP at 85.50. Okay, cool. Okay, cool. So you're looking for it to drop a little more, right, Rashida? That's cool. I mean, it might take a while. The market's really, really, I don't want to say choppy, but this thing's been running for a long time. So again, this entry over here at 721, guys, the average can yeah, it's way too slow right now. The average candle size for it to hit is about 9 candles, and this is using a sample size of about 4 weeks. So over the previous 4 weeks, this trade would typically hit within 9 candles, right? This trade has been running for a long time. So usually this trade should have hit by now within the first 9 minutes. This thing's been running for about 30 minutes now. So if you want to move your stop loss and profit, maybe take profit, maybe like, whatever you want to do to feel safe about the position, I would probably do it. Um, this is it's been on for way too long at this point. So let's see. So 739 right here, you can see that it was against the momentum. The algo was actually pretty spot on again right here, guys. So let me mark up, see right here, 739, 740. This identified that a momentum push was going to happen. And let me mark it 739 right here. It was on the dot, right? So price here was pushing up. We had a bullish momentum. Price kind of went sideways, and then it pushed back down right here, right before the against. So if you guys want to use my algo just to identify possible reversals, this will help a lot. This will help a ton. Yeah, Rollins to no dice this week so far. Market is no bueno right now. 721 trade is still going. Looking forward to next week. Yeah, I know. I was really hoping we'd have at least 1 or 2 trades this week, Roland, to bring everything back up, right? The good thing with our strategies is that since we're applying a 1 to 2, it really just takes two wins, right? If we could have 2 days that are pretty solid and good and they win, it'll recoup a lot of losses that would have happened over the past couple weeks, right? Because yeah, it's yeah, that's why I'm sitting on my hands too, bro. I'm not like I'm not trigger happy right now trying to get into something super quickly. I think this is what really separates a trader from being an amateur trader to a professional trader in a sense, right? You have the ability to stay disciplined and to stay out when necessary. Right now, there's just no entries. My only entry was at 659. It was a no entry. This one over here would have been one that I would have liked, but again, it just doesn't meet criteria. Plus, it's been running for so long. So I'll put this in the notes right here. So I'll put like 40-minute trade so that we're aware. So over here, six, 743. I mean, the volatility here is really, really low. 743 was lost. I'm still documenting these trades even though I'm not taking them. So I'm just updating the spreadsheet as we go. The 743 here was for a sell, was with momentum, 6% max drawdown, 55% across the board, 2.4 profit factor. Had the Maybe there's just no entry there, or there was an entry, but it just wouldn't have been good. You scroll down a little bit. Let's see, question from Momentum Kenny. Kenny's asking, what kind of experience do you have in the hedge fund space? Um, I mean, the hedge funds, I've been in the hedge fund space for about 2 years now. So, I mean, experiences like actually operating one, trading hedge fund strategies. I mean, this is as close as we've got. Like, it's been improving over the 2 years, of course. But I mean, it kind of depends on like what your question is regarding hedge funds, right? I mean, is your question like operating a hedge fund, or is your question like managing a fund? Because it's my hedge fund, so like I kind of have to do everything. Um, so I mean, yeah, it kind of depends on your question, Kenny. If you want to go more into like detail with like what kind of experience I have, I could tell you I know like not all aspects, but for the most part, I have to learn everything on my own basically. So like I know enough to operate one and to get licensing because I'm licensed, right? I had to go through the whole process of taking the Series 3, getting funded or taking the Series 3, passing the Series 3, registering with the NFA, registering with the CFTC, going through all my disclosures, going there's like a lot of there's the process is pretty deep. So I mean it depends on your question if you're talking about the operation side or if you're talking about the trading side because they're totally different. Um, the operation side, if you're asking like, how to run a hedge fund, how to start a hedge fund, etc. I've done all that because I've started on my own with no help. Like I don't really know anybody or I know people now, but when I started my hedge fund, I didn't really have someone to show me how to do things. I had to figure out how to do everything. So the operational side, I know a good amount to start like a basic one, like what I have. My fund is not huge by any means. Um, and if you're talking about the trading side, that's completely different, right? If you're talking about the trading side, it's like most hedge funds trade like this based off the quantitative data. They don't really use technicals at all. But I do have a technical background because that's why I created these strategies prior. So yeah, Kenny, if you want to go more into detail with your question, I can answer it. But it just kind of depends on like where your question is with regard to my experience because I've never worked in a hedge fund. So if that's your question, do I have experiences working in a hedge fund, like having someone show me how things are done and stuff like that? I don't have that. I don't have the traditional experience. All of my experience is through learning on my own and operating and through trial and error. I mean, I wish I knew someone that could have walked me through it because it's a lot of work. I mean, it's a lot of stuff to learn, right? Hedge funds they play a different game. It's not like retail traders where you're looking to make these big profits and these big gains every single day. In the hedge fund space, you're mainly looking to protect capital and make consistent gains, right? I think that's the whole hedge fund game, really. It's like for me, I don't care about making like a ton of trades, right? If you look at my trades for this month or this for the like for a while, I haven't really taken very many trades because my goal is really to protect capital. I'm playing a different game than everyone else, right? When it comes down to comparison with a retail trader or how I used to trade before. When I used to trade years ago, when I was like, considered a retail trader in a sense, I was always looking to try to make as much profit as possible. Now that I'm operating in a hedge fund capacity, my goal is not really to make a ton of wins or a ton of profits. My goal is really to have consistent wins that are repeatable, right? Like I'm looking for like maybe, 1 to 3 net wins per month because if everybody's making profit, I get a percentage of the profit or I get a management fee. And that's how hedge funds make money. Hedge funds tend to make money based off the management fees, not necessarily from trading specific accounts unless they're doing a performance base. For me, I'm trading my own accounts. So like I'm also trying to make money through my accounts. I'm making money through management fees. I'm also making money through or performance fee. So it's just different how hedge funds operate. That's why for me, if you guys see, I'm very disciplined about my entries. I only have one entry for the day, right? There's a bunch of entries here I could have looked at and maybe have taken, but I have my eyes set on this one entry because I'm looking for like one big trade per day. If you guys haven't read that book, it's a really good book. You guys should probably look into it. I've mentioned this quite a bit of times. It's called One Good Trade by Mike Bellafiore. He owns S&B Capital, which is one of like the longest standing proprietary trading firms out there. Uh, yeah, if you guys want to look into it, I mean, this is a pretty good book. This is kind of where I got the concept of like one good trade per day. It's a good book. It's a really good book. So yeah, one good trade highly inside the highly competitive world of proprietary trading. And when you guys look at proprietary trading, I know a lot of people think, oh, this is prop trading or whatever. Proprietary trading is just trading other people's money, basically. I feel like a lot of people want to overcomplicate a lot of things when it comes down to trading. They want to overcomplicate the strategies, the terms, you know. Trading is really simple, guys. It's really just finding the probabilities that work in your favor and just taking risks, right? For me, I like taking calculated risk because, like I said, I'm looking to manage capital and protect it, not necessarily grow it exponentially, right? There's some funds that are discretionary and they try to make like they try to make exponential gains like that, but in the real hedge fund space, you're trying to survive in this game, right? Like you're looking to your main goal as a hedge fund manager is not to blow people's accounts. Because if they blow your accounts, you lose them as a client forever. Your goal is to keep your client and manage their funds and grow it with quality trades over time so that they keep paying this management fee, right? That's the thing. Like, as long as they're making profit and they can afford the management fee, like they're making a net profit over whatever they invested, then they're happy, right? And that's just the game that hedge funds are playing. It's different. Yeah, exactly. No more work said, quality over quantity. Yeah, I prefer to take one good trade per day versus like 10 okay trades and then having and so this is what would happen a lot of times. You take a lot of trades and then you just end up at break even. And then you still have to eat up the fees and expenses per trade. So in a sense, less is better. Let's see, Roland City, yeah, but learning more and more as we sit on these live sessions. Appreciate the insight from everyone. Yeah, no, it's always good to see how everyone has input. It everyone analyzes the market differently, right? This is why I always tell people like there's no one strategy to apply. You just got to find out what works for you and what's consistent. Because you can trade supply and demand, you can trade support and resistance, you can trade momentum, you can trade trend, you can trade whatever you want. As long as you have a statistical edge, you know, you can apply it. For me here, my edge is really finding just these little inconsistencies or consistencies with the market to identify momentum swings. The problem with the market here is that it's so slow. The ATR is currently at 12 right now. This is extremely low. Typically, the ATR you want to be around like 30, between 20 and 30 would be a good number. This just shows that the candles are moving very, very slowly, candle by candle. Let's see. So CJ said, to answer Kenny's question, Sean is a profitable trader for more than a decade, has taught thousands to become profitable traders consistently, passed the Series 3 on his first take, and is the only trader who shows his trades live on YouTube. Not to mention, he helped individuals like myself quit my job and consistently earn no matter what the market throws at us. P.S. He's also helped me retire by age 39, even though I don't work. Thanks, CJ. Yeah, no, definitely. My main goal here when I started this community and our YouTube live streams and stuff is not really well, in a sense, I was helping people with like, mentoring and showing people my trades and stuff like that. But by teaching while I'm trading live, it helped me become better as well because I was able to really analyze the market quickly and adapt with the market as things change, right? If you guys want to get better at trading, I would say to not trade live, but like not necessarily trade live, but trade with an audience, right? Because for me, I can't really screw up here. If I screw up with you guys here on these live sessions, it's gonna follow me, right? Like I don't know, I have over almost 2,000 live trading sessions for trading over 8 years every single day. Um, and you'll see that I'm very consistent with like my discipline and being able to sit out of the market. I think that's that's the biggest thing. But yeah, teaching you guys my strategies help me make them better. right? Like I mentioned before, with this MPSV2 strategy, this strategy was okay for at some point when Brock brought it to me, but I made it better to a point where it was providing a higher edge. So yeah, I don't really see anything else here, guys. It is 8:03 right now, so the market here is pretty much flatlined and it's pretty much dead. The 620 721 entry is still running. It's been running for some time now. Hopefully, you guys pulled out when I mentioned down here. It's probably a good time to pull out because this trade's been running for about 42 minutes now. Very, very long time for it to be running. Looking over here at the trade history for today, 757 was a buy. Let me check real quick. So there's another trade that's currently running right now, but it's running pretty slow. So I'll update the spreadsheet once this trade is done with. But for the most part, I think that's it for the day. So, all right, guys, unfortunately, this is one of the slower trading days of this week. It was expected as we are entering the New Year's Eve phase. Tomorrow is New Year's Eve. I will continue trading tomorrow. I'm not going to be done trading yet, so I'll look at the data. We'll kind of see how it moves. I think market will still move tomorrow, so I'll still be trading, but I'll be very cautious. So if you guys want to come back for this live session tomorrow, I'll be here, um, or I'll try to be here. If I look at the market pre-market and it's really, really dead, like it's like this, then I might just skip the market, but I'll probably be on the Discord still. So I'll keep you guys updated. Expect for me to come on the live session, but if it's really, really dead, I'm probably going to cut it out pretty early because there's probably gonna be no point for me to trade after 7 o'clock. So, all right, guys, that's it. If you guys have any questions, feel free to hit me up on Discord. Otherwise, I will see you guys back.